Yo, what up everyone? In this video, I want to recap a trade that I took along with some trades that we took in my Discord community. And then I'm going to review some market context with some very important lessons to learn from the market the past few days. And I'm confident that these lessons are going to give you the proper knowledge to help make better trades in the future and avoid making simple mistakes that prevent us from making profits. Before we get into it though, if you haven't already followed me on Instagram at Entrepreneurship, I'm going to link it in the description below. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. The link is in the description below. You're definitely missing out if you're not following it. But now, let's get right into this video. The first key point I want to take out of this video is you must trade high quality setups. I cannot stress how important this is. I'd rather take one high quality trade versus taking 3 or 5 or 10 shitty, low quality, mediocre trades, because I know that one high quality trade is going to reward me so well and it has a high chance of working out versus something that's a little mediocre that I don't know if it's going to work out too well and my risk might be a little too high compared to my reward. So stick to trading high quality setups. Figure what your high quality setup is. Now, this also kind of goes with knowing the proper conditions to trade in that fit your style the best. The market always is in a different environment. It presents different conditions, and you have to know the conditions that work for you the best, fit your style, and the ones that you make the most amount of money in and take the best trades with. Price and volume will tell you this. It's going to tell you the story that you need to know. The market's the storyteller, and us as traders are the readers, and we must comprehend the story that the market is trying to tell us. So this brings me into my first trade. It's all going to come together. This was on BABA, and I would have considered this a very high quality setup. Now, just to get context, let's go over the pre-market plan. I post these every single day in the Discord of the setups I'm watching, levels I'm looking out for, and things of that nature. So today we had BABA. I like this on a pullback into the 128, 127 level or the 130 to 129.45 level, which must hold. And we're watching a break above pre-market highs to really get this thing moving up. Now, I'm going to go to a daily chart and you're going to see this a little better. So what I liked here, I always like putting the bigger picture together to give me a little more pieces of the story. And then I go from an intraday perspective to put actually a trade on and enter and exit the position. So what I liked about this is BABA has been recently aggressive selling off, and we put a low in around 108.70 with very high volume. I like to see that a lot. Now this actually formed demand, and when we pulled back, we held this little area right here at 108, and then we got another nice, very strong rally candle to the upside where we technically bounced off demand and also created new demand on the way up. Remember, price and volume is all you need. So now we had this nice volume candle coming in, the market pulled back, and the past 2 days before today, January 7th, 2022, we had some nice heavy volume with the market trying to move up. So go into a 5-minute chart now. I'll show you the past 2 days. You could see yesterday we had some very heavy volume. The market pulled back, got bought up, and made a move up. And then on Wednesday, January 5th, we had a very nice strong rally to the upside. So now we obviously have buyers factored in. The larger time frame picture is coming together. And from the pre-market plan, I wanted to bounce at this support level at 129.45. It was back from December 7th, I think the level was, or December 6th. And this was a very important support level that if we did hold, it could serve as buyers stepping in. Now, this is different from demand. This is not a demand imbalance. This is just an old resistance level that now turned into support. I will say it's very important to mark your levels of interest and see what or how the market reacts to that level. Now, I actually have a live recording of this. I was recording my screen this morning, and as BABA, I don't want to show you guys the whole thing because I'm adding this video to the tape reading section of the course. It's almost complete. It should be done very, very soon. I added a full tape reading section, level 2 time and sales, and actual trade examples of what I look for. And I got a very clean recording of this trade that I took. But as BABA was coming into support, we saw some very heavy bids coming into the market. As you can see here, 117, and then briefly there was like a 145 order or something like that as the market was coming down into support and as we were trying to move up. So obviously we have a large buyer coming into the market. I don't want to play this whole video, but we came into the 129.45 area and immediately found a bid. Now, not only did we spot a bid on the level 2, but we found the bid, meaning price came up and the buyers defended it. So now that we identify that, we also had the context of very heavy buying. Now, as you can see up here, these labels, we have very abnormal volume compared to what we have been seeing. If you are trading a breakout, that is exactly what you want to see for continuation. So the market opened up the first 5 minutes. We consolidated. We based out. I'm going to go to a 1 minute chart now. And when I saw the bids come into the market, it was as we pulled back into this 130 level, around 933, 934. And now, once I know buyers are factored in because the market came back down, sellers hit the market, and there was that buyer, that bid absorbing those buyers or absorbing those sellers. Now I'm just waiting for the market to react and start moving up and that buyer to show effort and for him to get rewarded. For continuation, if we're a buyer, we have to show effort because if we show effort, we're going to get rewarded, especially if we're trading large size and we are trying to move the market. So as soon as we started coming up, you have to be reactive. You have to think fast and act fast. I loaded up BABA and I got long the 132 calls at 936 for about $1.30 fill. At this point, my stop loss is below 130. I could have put it below support, but I was confident that this buyer on any pullback would have defended it. And then as the market was moving up, BABA kept finding that bid. Let me pull up this video again. BABA kept finding another bid. The offer was very thin. And now that I'm in long, my next area that I want to see price react at is this 132. Clean break through it. Very nice time in sales indicating buyers are buying. As we got above the 132 area, we consolidated. It acted as support and we did have continuation. I posted my entry and exit fills in the Discord for members that want to go back. But I took profits when we were stalling out around the 133 area, especially up about $2.50 from my entry, risking about 70 cents, maybe $1 in this case. And then I wanted to get more room. I like how we pulled back, came back up. And at this point, my position is off 90% just to protect myself because we have been seeing lack of follow through in the market. And as we started moving down, we failed to break above the high. This was a red flag signal for you to exit. And then the market started selling back off. And my last scale was a little under 60% return in a 20-minute period for this very simple, high-quality trade on BABA. Now, this is going to bring me into my next point because what I just said about taking one high-quality trade is better than taking 3 mediocre trades. So I will say very fast that the market has been very, very strange, specifically talking about ES and NQ and other equities lacking proper follow-through because of the action that we have been seeing on the overall market itself. So we have been seeing lack of follow-through. That is also why I took profits on BABA pretty fast and really didn't expect a larger move if the volume did die out. But what I have noticed recently, and maybe let me know if you guys have noticed the same thing too, is recently they make the market look bullish when they are preparing to sell, and they make the market look bearish when they are buying. So what looks like selling might be buying, and what looks like buying might be selling. I'm going to show you exactly what I mean. So yesterday on the S&P 500, we had a very simple plan. We were watching for this break. We had a very key area of demand, and I said, let's be open to any possible scenario, up or down. Do not have a bias going into the market. We had a very key demand at 4677, 4688, and we were trying to bounce off of it. If we did hold and we get acceptance above 4708, I'm going to be looking for a quick 12-point scalp into a supply that we had above. Now, this is where reacting to what the market gives you, no one knows what's going to happen next. However, if you plan out your levels prior, or even when they do form, it's key to see how the market reacts instead of trying to predict what it is going to do. So what I liked here, this is on Thursday's action on the S&P, January 6th, bounced off demand pretty nicely and started moving back up. The market opened up and we tried getting above this 470861 area, but there was really a lack of follow through. And now going back to the chart after the fact, I didn't really realize this as it was trading. A member actually brought it to my attention. We had supply in this area right here that we hit it perfectly. And some member came up to me and made a sick profit from this sell-off, targeting demand. Absolutely killed that. Those contracts exploded because of the high volume. But, at one point, look, they made it look very strong. What looks sometimes to be buying, they might be selling. The market immediately reversed, right? And now, let's just say you don't know we have demand here. The market's selling off about 40 points. Yeah, if I didn't have a green box here, I would think the market is going to continue going lower. But when they make it look weak, they make it look like selling, they're really buying. We bounced perfectly out of this demand zone. I really didn't see a proper entry off of this zone. Others did, others took it, but every trader is unique and different, has their own style or personality on how they trade. So this thing bounced pretty nicely off of this demand zone. And now that we have buyers factored in, we're holding above VWAP. Again, what they make look like buying is really selling. We did break above that 4708 area. And at this point, since the market technically is playing games, I don't want to use the dating advice again because I used dating advice in my last video, but it's like a bad girlfriend. If she's playing games with you, she's not cooperating, she's not listening to you, just dump her, get rid of her. It's the same thing with the market, This thing is playing games. Even yesterday, right, with the Fed announcement, prior to the Fed move, we were very choppy, lacking volume, and it was playing games. Then the Fed stepped in, we got the news catalyst, and the market aggressively sold off, forming supply. Now, on Thursday when we opened up, this thing starts playing games. We break above. If the market plays games and it's not really presenting volatility or clean price action, again, price and volume will tell you everything that you need to know. It tells you the story. So if it's playing games and it's not cooperating, you need to wait for better, higher quality, and proper confirmation if you are looking to play long or if you are looking to play short. So yes, we broke above this level, but for me to play long, I would want to really see acceptance. I would want this to act as support. I would want new demand to form, or even just higher volume as we broke out. Volume was pretty dead compared to what we saw in the morning when we tested this level. So didn't really get confirmation signals there. We moved back in the range, and again, they make it look like it's buying, but they're really selling on the other side. Now, this was evident today, and this was a trade that we could have prevented. So I want to break this down pretty perfectly because there's a lot of lessons with this. So I'm going to pull up NQ here as well. So keep in mind, NQ was selling off, and we had this very, very key demand zone that I said from the pre-market plan. Pull this up here. NQ plan, same as yesterday. What I see is a very important area of demand that prices bounced at before, and it is key to hold if tested today. I may look to play longs if buyers respond here. If they don't show up, it shows more selling. So now that we have that context on NQ, let's go back to the S&P because there's an important lesson with this. So yes, we bounced off of demand here. This kind of gave me extra confirmation on that BABA trade as well, knowing that the market was bouncing off demand and was strong. We failed at 4,700, right where we had this upper wick when the market opened up. I did not take a trade on the S&P today. I'm just analyzing it because there's a lot of lessons that we can learn. Then we started aggressively selling off. Now, the plan today was to be bearish if we did get below this demand zone and if we did start to see some heavy selling pressure below this. But put yourself in the perspective of playing to the short side. If we were looking to get short here, I do this for every single trade that I take. If I am looking to get short here, if I try to put myself in the position of a seller and the position of a buyer, if I say if I'm short here, does it make sense to get short? If I say yes, or if I say no, then I'm probably not, or if I say no, I'm probably not going to take the trade. Then I also ask myself, does it make sense to be a buyer here? And if I say yes, it makes somewhat sense, then I'm probably not going to take the short setup. If I traded this to the short side down here, where would my risk be compared to my reward? where would it make sense if I am playing puts right here to put my stop if the market does bounce. For me, it would have to be about 14 points higher at this area, and after a 30 or 40 point extended move to the downside. If I'm chasing a downside move after 30 points without a relief bounce, in my opinion, a probability standpoint and a risk to reward standpoint, it does not fit my criteria of me looking to put a trade on right here, because it just doesn't make sense. So that helped me avoid the short setup. Yes, you could scalp it. Yes, you could make money off of it. A lot of traders in the Discord absolutely killed this on the short side today. However, by the time I was aware of all this happening, I was not a fan of taking the short, because risk to reward and probability wise, it was not in my favor. Now, at the point we were selling off right here, NQ was coming into a very key area of demand. I cannot be short going into a key area of demand, especially after it's been respected, multiple times after testing it. So we sold off, and we actually bounced at this perfectly. QQQ calls paid ridiculous. I think like 70% in 30 or 40 minutes off of this demand zone. So nice bounce off of that. That helped me avoid this spy put setup. Now remember what I said earlier, right? Not only is it Friday, so the market's going to play games, but what they make look bearish or weak really is setting up for a potential reversal. In the Discord today, I'm going to pull this up here. I was saying that it's very, very important to understand the participants and the competition in the market. So we had this nice little, I guess you could call it wedge or downtrend line. It was making higher highs. It was also making higher lows, that as soon as we broke below it, this looks very weak, right? I mean, look at this point. It looks extremely weak. But with the context that NQ was coming into demand, and with the context that what they make look weak or selling actually is buying, it helped me avoid the setup. And this actually provided a nice opportunity to possibly get long while NQ was in demand. So, and then we had a nice, 30, 40 point rally off of that. So it's all about just identifying the context, understanding quality setups, and knowing the conditions that you are looking to trade in, whether it makes you take a great setup or it helps you avoid taking a shitty setup. That's really the only thing that matters. I'm a very defensive and conservative trader. I know what works out for me the best. And point I want to leave you all off on is, as a trader, stop comparing yourself to others. I see it all over social media, right? People posting large wins, crazy lifestyles, right? Oh, he just made 20,000 today. I'm going to size up because I want to make a shit ton of money today, right? That is the wrong mindset. As a trader, stop comparing yourself to others. I said what I see is a lot of people comparing themselves profit-wise, success-wise. You are on your own journey. Stop looking at others. You are hurting yourself more. Focus on you, where you got to go, and the path that you are creating for yourself. Focus on the journey, not the destination. In my opinion, the journey is funner, I know it's not a word, than actually getting to the destination, because there's where growth comes into play, and that's just where I have the most fun and where I enjoy being at. So also, all it takes is one high quality trade. I'd rather take 1 to 2 high quality trades than taking 5 to 10 mediocre. I haven't placed the trade the past 2 days because really just wasn't feeling the conditions and the setups, and I really knew my edge. If it was there, it really wouldn't have been of quality. So like I said, that BABA trade that I took today was a quality, and it made up for those missed days of no trades. If you find yourself having the need to trade every single day, you're putting a trade on every single day, and you're consistently losing, take my advice. Focus on quality versus quantity. I don't care if you take 1 trade a week or 3 trades a week or whatever. It's much better than taking a number of trades and trying to meet your quota of always having a trade on, right? So quality over quantity. And I think I'm going to leave you all off on that point. If you enjoyed this video, you learned something, drop a like, comment if you have any questions. And if you really want to learn more, check out the links in the description below. I offer a very in-depth and educational course that comes with access to the Discord at no extra cost. I'm almost done with the tape reading sections. I will be adding them to the A to Z course. really, really good information with them, some good live examples, and a different way to really look at the market and to put trades on and really add to your arsenal. On that note, I'm ending it. Peace out.